talk about Veranda listing, they too reported their numbers. Revenue saw growth of 92% on a year-on-year basis in quarter 3. Even when you're looking at it in terms of the margins, actually there was a contraction there. Now, to understand what impacted the margins of the company or the profitability of the company, let's go across to Mr. Suresh, the Executive Director and Chairman at Veranda Learning Solution, joining in with us this afternoon. Thank you so much, sir, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And, I want to start by talking about the quarter 3. Quarter 3 is generally a lean quarter for the company, especially from for the education side. So how was the overall performance you would judge it as, and what has led to the decline or the drag that we've seen coming in the bottom line of the company?
Thank you. So quarter 3 is a lean quarter. Given that, I think the company has performed exceptionally well, grown almost to 100% year on year compared to the same quarter last year. In terms of our EBITDA margins, again, our EBITDA margins were in excess of 17 crores positive. This was over the 16 crores we achieved last quarter. So on a quarter-on-quarter basis, our EBITDA margins have grown. Our PAT margins are negative, predominantly because of non-cash charges relating to the acquisitions that we have done and for provision of costs for the residual stake in many of the acquisitions that we expect to complete over the next 3 to 5 years. So a predominant cost has been non-cash. At the EBITDA level, the company stays healthy, positive. It's been a quarter-on-quarter growth even compared to Q3. But non-cash relating to the acquisitions that we have done is the predominant cause for the negativity that you see at the PAT level. The company is working on a restructuring plan where we expect to be able to take most of the non-cash, especially relating to our acquisitions, take them out of our reporting. And that would essentially mean we are projecting for FY25 to be significantly not just EBITDA positive, also PAT positive.
Right, sir. Sir, also what I want to understand is in terms of what is the target enrollment looking like for FY25 and inquiries that are coming in for the rescaling courses. Do you see that seems like picked up pace or something like
that? So as far as FY24 is concerned, we got another few months to go to complete the year. We had projected that we will be training close to 500,000 students. As we speak, for the period ended 9 months, December, we have already crossed 500,000 students. We are at about 5.5 lakh students who have already been trained. So the enrollments have been going ahead of projections. We expect to be able to close FY24 as we have been projecting earlier at 100% year-on-year growth in terms of top line and more EBITDA margins, which were closer to negative 35 crores to a positive 70 crores for the year ended March 24. There are a couple of acquisitions that we are currently targeting. We have signed term sheets. The diligence is ongoing in a couple of interesting space that sort of completes the grid of the Veranda ecosystem. We expect to be able to complete them by April, early May. And that sort of also brings our acquisition cycle to an end in some form. And with those acquisitions being completed, we are projecting an FY25 EBITDA of closer to 400 crores. With then again, our sales doubling, going from FY24 to FY25. With that, I think FY25, we also expect our student enrollments to double. Right. We expect to cross 1 million students for FY25 and be significantly PAT positive.
Okay, sir. Suresh sir, thank you so much for joining in with us. We were a bit on short of time, but yes, the bullish commentary coming in, at least on the enrollment front, is quite exciting to watch out for. Thank you so much, sir, for joining in with us on ET Now. That was the management of Veranda Learning Solutions.